Alright, YouTube. I ain't gonna hold you. I've been struggling. And with all my struggle, I came up with this right here. This video, I have to do this video before I do any other video. And this video is basically to explain to you STC patterns. Patterns that I trade and a lot of other STC traders trade that will help benefit you when it comes to understanding these trades that we take, the structure, the strategy, stuff like that. First things first, if you're new to the channel, subscribe. I'm going to say that for like a few seconds. Subscribe, 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 subscribe. Second, if you're old to the channel, subscribe still. Unsubscribe and subscribe again. Because why? I need the engagement. You feel me? Cool. Comment, like, all that shit. But subscribe. Okay? Cool. Now, I don't want to make this video long, but I don't think there's a way for me to not make it long. When you come to the market, you have your downtrends, your uptrends, your ranges. You feel me? And I'm trying to show you guys what each of these stuff look like when it comes to Renkos. How to approach them, how to trade them. You feel me? Now, when it comes to a downtrend, normally at an external high, which is the points you have me marked out, well, which is the points that I have marked out. In order to help you find these, there's an indicator on NinjaTrader for completely free called the swings. You put your 34, it's going to mark out externals for you. You feel me? Cool. Well, hold on. I moved kind of quick. These are the settings for it. Okay. Let's do infinite. Okay. So, now that you have these points marked out, they're your external highs. You can go ahead, fact check that for me. We'll sit here for like a couple seconds. Now that you fact checked that, you done paused the video and did that, you realize it worked, right? Here's what I need you to understand. In a downtrend, you're going to see a few things. Let's zoom in so we can see. First thing you're going to see is a pattern, right? It's an ugly one because market opened right here, so it made that little stupid wick. But what you have here is a head and shoulders, right? Let's put that there. With this head and shoulders, that implicates a sell pattern. That's an STC sell pattern. STC sell patterns, when you get a head and shoulders, first thing you do is you take the neckline break. This right here is the neckline break. You have your head, you have your left shoulder, your right shoulder. Let's move this away. Neckline break is right here. Let's put that back. Let's put this there. Let's change the color to red. No. Yellow. Head and shoulders. Right? For a text here, neckline break. That's an entry point. Now, at your neckline break, you also get what I like to call neckline retest. At this point right here, as you can see, matter of fact, it's right here. Let's change this line to a yellow line. Okay, so with this STC pattern, let me break it down to you. You have your head and shoulders right here. You have your left shoulder, your right shoulder, your neckline. Neckline break. Entry point 1. Matter of fact, where is it? Matter of fact, I'm capped. This is how you trade the first STC pattern, which is a head and shoulders. Feel me? Neckline break. Aim for how many ticks you want. This gave you 98 ticks. If that's enough for you, that's enough for you. Neckline retest. If you missed the first entry, your stop loss is above the neckline. Let's go ahead, put that there for people. Which one did I use? Stop loss placement is above the right shoulder, always, for the break and the retest. Now, the retest can either be an entry point at the neckline or using a rejection. So you can have a limit order set here, or you can wait for price to reject, and then you can use some kind of validation, I would say the word is, to see either put your stop loss above here or your stop loss above here. But if you get tagged out above here, that's your fault because your stop loss is supposed to be above here. Understand? Understand. That's the first STC pattern, right? Cool. The second STC pattern is this right here. Break and retest. Is this line? I keep forgetting. I smoke weeds. I'm sorry. This is the second STC pattern that you're going to see after you miss the trade. A break and a retest. What is it breaking? It is breaking these lows and retesting these lows for a continuation to go down. Now you have these prior highs that is obviously stopping it from going up, right? And how do you know that it's not going to stop from there? You don't. You have this pattern telling you down and this pattern telling you up, with you as well being in an uptrend. But as long as it didn't break these highs over here, you know for certain that you're still going down. Another confirmation, this is the break right here. I'm tripping, sorry. But I want y'all to see this in real time, right? So, if you were to trade this, looking at this time frame, and you're looking, you have one stop loss placement, entry point one, entry point two is the same as entry point one, entry point, which is the retest, you can get the neckline break, which is another break and retest. Entry 4 is a break here. That's all in your down. In order for you to have seen if this was going to stay, you would have needed to see price break above here for it to invalidate your trade. But you have, to be fair, there's more than just these 4 entry points. You have a break here, which is entry 1, right? Neckline retest, after it breaks, it comes down, retest, that's also entry 2. Cool. Shoots down, if you don't take profit, it comes back to here, entry 3. But if you got balls, a break below here, you could have entered, so that could have been entry 3 as well. So this could have been 4, but we're going to do safe, so this is entry 3. Doesn't break these highs, you don't get in, entry 4. So, I hope this makes it a lot easier for you as far as, you know, entry placements, how to get in. This is a sell. Now, I have this green line marked out because on a higher time frame, it is a swing high on a 4-hour. We came to a 4-hour external low. What do we see here? Boom. Head, left shoulder, right shoulder. Inverted head and shoulders. You see? Same thing up here, just this one's more formed out, right? Cool. Now that you have this inverted head and shoulders, I know you're thinking, where would you enter? I got you. Neckline break. Entry point 1, the break of this box. This right here. Let's swing that around. Stop loss placement. Underneath the right shoulder, this wick. Right? Right. Off the external. Super shoot. Up. Okay. So now, this is an inverted head and shoulders. You'll normally see that or a W. You feel me? We come over here. What is this? Range market. How do we know? We take a box, colorless because it's internal. We push up. Cool. Bounce, bounce. We made another high. Okay. Let's draw that one out. Drag it out. Okay, I'm not liking this. Bounce, wiggle, wiggle. Push up, new high. Okay. Bounce again, new high. Okay, we're making highs, but they're just lightly higher. We're not breaking the major external. And then boom, we come to a stop. This is a trap. It's a range market. It's telling you we want to go up, but we don't have enough juice to go up to your external. You feel me? What does that mean? Your external is probably way bigger than what this little line shows you, right? But I like to fine tune my stuff for that one reason. Feel me? So it's probably bigger, and this is probably out to here, and which is why you have a bunch of these rejections. But for right now, it's fine tuned, and I like to do this instead, which is mark them up as internal. As long as we don't touch it or go above, well into the resistance, that's what I want. Feel me? Okay, we broke out of said range, right? Come up, boom, new high, new high, new high. Okay, so with this being formed, what does that mean? Now the previous high needs to be broken for internal structure to be broken, right? So that means this is external structure right now. We've bounced off of this so much that now this is the new high. This is where it needs to break. You feel me? It's still off of this one box over here. But internal structure says the previous high acts as the new floor, and we need to break previous. So this is the previous high from the new higher high. Didn't go high, didn't go high, broke it. Right? what does this look like right here? It could be an M, looks like an M. Left shoulder, right shoulder, it could be a head and shoulders, either or. But we'll just label it as a head and shoulders. All right? So what do you need for a head and shoulders to flourish? A neckline break, which is what you got here. You could have said either here or here is my neckline break off of the external. All right? You know me. Where would your stop loss be? Above the right shoulder. You see? Now, neckline break here. We anticipated price to come down here. It didn't. You have a structure break here. Right? Watch. Price came, used the structure break because we couldn't break this. It used, let's leave this box here. Used the structure break, retested it, came down more, decided this was enough, pushed up, and then used this same structure to bounce off of. Right? Neckline break. You can either count this as a W right here or inverted head and shoulders. Head, left shoulder, right shoulder, right? I'm counting this as a W. So entry point 1. At the break of this wick, I'm getting in. Right? If you're treating this as an inverted head and shoulders, this is your neckline break. Understand? Now, the only difference is where would your stop loss be? Your stop loss is either here if you're anticipating the W, or here if you're anticipating the inverted head and shoulders. Feel me? So y'all can see it better. Right? Look how this shit just keeps gelling with you. And then we keep taking it over. So now we come back here. Price hits an external. What happened last time? We fell. So let's say you're in this trade. You take it up. New high. Right? New high. New high. Okay. Price says we go to the previous high. Oh, we forgot to do the lows. This is a new low right here. So we new high. We can go like this, or we can use the low. We'll put this on the low because at this point when this was here, it created the new high. You had that. It bounced off of this, made it look kind of good, came up, didn't break the high, bounced off of this, so this would have made this valid. So let's drag this across. Pushed up, new high, anticipate the break, come down, bounce off this, push up, no new high. Suspect, right? Cool. So here's what we're going to do. Now, we know this is a floor. Every time price come here, we're looking for the break. This can either be another head and shoulders. It could be an M, however you look at it. You feel me? But this to me, head, left shoulder, right shoulder. Where's your entry? At this point, you should know where entries are. You feel me? Every time you see this, it should be second nature. Right? Cool. Now that you have that, a new pattern is formed. W's. We love W's. W's on support equal what? Buy patterns. The more W's you see, the more it doesn't want to go down. It can fake you with W's, but they normally mean it's time to buy up. W's off of external supports always mean buy up. If we drag this over, look, we hit an external. This is current price. We should start selling down. M's, W's. Simple. I don't want to drag this video out too long. It's already damn near 30 minutes. So if you like what you see, this is STC patterns, frameworks, and everything. This is how I trade, and this is basically on my confirmation chart. So I go down to smaller time frames and I look for more patterns. On the part 2, we're going to break down the jumping into the lower time frames and finding the smaller patterns to confirm the trades that I just showed you. Alright? If you're new to the channel, make sure you like, share, subscribe. If you're old to the channel, make sure you like, share, subscribe. It's your boy Slime. Peace!